Here on the Market Day Report, we are being joined by Todd Horwitz with Bubba Trading. He joins us now from his office in Redwood, Illinois. And good to see you this morning here, sir. Thank you very much for being on the program. First of all, you wrote about this is another week for the Fed to meet.
It is. Good morning, John. You've got a Fed meeting on Tuesday, Wednesday, a two-day meeting in which they're going to discuss rates. And of course, the street has said are basing a 0.25 basis point cut to rates. And that's being reflected in the bond markets. It's being reflected in the Fed funds rate that they're going to cut 0.25 basis points. Now, again, if they do more, it would buoy the equities even farther. If they don't do anything, it would probably cause a major sell-off in equities.
If they sell off in the equities, then does some of that come over to the commodity side, do you think?
Oh, I think, look, I think that's the big thing now. I think that's really what's holding back the grains right now is the overall rally in the markets. I mean, we're making new highs again today. You know, that cheap money keeps rolling in because when you look at the grains, they're all around support. They don't look bad, okay? Corn's a little bit tenuous here, but right at support. I mean, you know, if it can hold within the next 2-3 cents, then I would expect to go much higher. But again, right now, the volume is almost non-existent. So it's like the markets are actually closed, although they're open.
Okay. All right. So obviously this expectation of 0.25% reduction is already built in. Where do we leave the dollar at this point? Because in talking to some of the analysts, other analysts, they say that this dollar needs to continue to weaken just a little bit to keep us competitive on the global market with some of these grains.
Well, again, I think that is probably the case. Now, again, you know, we were very bullish the dollar, and we reversed, you know, last week or a week or 2 weeks ago, whatever. But again, I still believe the dollar's got a big run left in it. But when you put the pressure of the central banks and the Federal Reserve on the dollar, which is really what's happening when they went back into the quantitative easing program and now with the next quarter point rate, all they're doing is devaluing the dollar to make our exports more attractive. Of course, what's going to happen is the other world currencies are going to lower again, and of course, it'll be the same mess over again.
Okay, let's go and find out where these commodities are trading at. The corn market was 1 to 2 lower across the board first thing this morning. We're 2.5 lower now on the December, 384.25. The March is down 2.5 cents. In the soybean market, we're up 1.5 for the November, 921.75. The January is up 1.5 at 936. In the Chicago wheat market, December down 6 3/4, 511. And that leaves us only 1/4 penny off of the low. The July is down 5.5 at 527. December Kansas City wheat down 4 3/4. The July is down 3.5 at 449 3/4. Let's look at crude oil also. We want to ask Todd his thoughts on this. December crude oil 56.03. We're down 63. The rest of those contracts all on the weaker side. You still looking for crude oil to get back down here, maybe into the 40s?
I am. Now, again, we see a little bit of an attempt to break out, and I think this morning's action really told you the real story. They spiked up early and went right to a level in which we would have been sellers anyways, but we're already short, and came off. So, again, I would expect them to start to work the other way. We're not going to get there tomorrow, but I think over the next, 2-3 months, we will see the high 40s before the year is over.
Okay. Todd, we're going to take a break. When we come back, we'll talk about livestock. That's straight ahead. Stay with us right here on the Market Day Report. We start here in the live cattle market, and we traded cash cattle last week, mostly at 109 to 110. We had this front month of the live cattle contract trading around that 111, 112, and now we're up 83 at 112.80, only a dime away from the high. The December is up 38 at 116.45. Even the February is up 45. November feeder cattle up 57 at 145.95. January feeders up 18, March feeders up 35, but the hog market today, it's on the lower side, with the December down 33 at 64.60, February down 55 at 72.80. We have brand new information out from the USDA as far as cutouts are concerned. The beef cutouts are higher, with the choice leading the way higher this time, up 207 at 227.51. But the selects have broken the $200 mark. They're up 18 cents at $200.02, but we only moved 35 loads this morning. The pork cutouts are mixed to higher, with only one of these on the lower side, and that's the loins. They're down $1.08. But the carcass is up 38, the ham's up 2.59, the belly is up 18 at 113.34. So all in all, let's ask Todd what he thinks of this market. You know, it seems like there's quite a bit of strength still left to go in this cattle market. Todd?
I believe you're correct, sir. I think, again, we've been long all along, and of course, you know, we go back to the Tyson fire where they had the panic low, and we've done nothing but go up since then. And the actual action has been extremely bullish as well, because it has pulled back where it should. It has consolidated where it should. And I expect to see, I mean, I wouldn't be surprised. I'm looking for 120 in the feeders, and I'm looking for 120 and 150 in January feeders, and 120 in December fats. I think that there's basically nothing that will hold them from getting up there. They look terrific. They're railing hard, and that's the way it should be. And of course, hogs, they're a little bit weak here, and they're right below, you know, they broke down last week, and they're right below some major resistance. If they can get back into that consolidation period, then they should chop. But this is typically a little bit weaker time of the year. If you look farther out, hogs get a little stronger. I think we just got to get through this December contract. I think then we'll be in pretty good shape.
Todd, there's still some people talking about the possible recession in the United States and how that could have an effect on some of these finer cuts beef. Are you still hearing the same thing?
Well, again, I personally believe that we're in the very early stages of a recession. But again, you know, that doesn't necessarily mean it's going to affect, you know, restaurants and people that would use the beef. I mean, because again, we don't see that dramatic effect until it rises up higher. And I think the initial stages are really not that big of a deal. It's just part of what happens. And when we continue to see the Fed continue getting involved in markets, trying to manipulate them, make sure that they continue higher, that is always a problem that eventually ends. We see how the same scenario in 1998 when the Fed got involved and cut rates, and of course 2001 we saw a pretty disastrous thing. So again, the beginning of a recession doesn't mean it's today or tomorrow. It could be just a start that we could be prepping for it for 2 years from now.
Ah, that's a good point. Well, Todd, thank you very much. Hope you have a good rest of your Monday. Todd Horwitz, Bubba Trading, from his office. They're just outside of Chicago. Janet?
All right. As always, thank you guys very much, John.
Yes, ma'am.